All right, we're going to do a quick technical analysis breakdown here on MRAM 1 minute time frame. We're going to blow this 1 minute time frame up, scroll out a little bit on it to get a big picture idea of the big picture, what's been going on. Always look at these charts with the mindset, where is there opportunity? Remember, we all look at these charts differently. All of us. We all spot opportunity in different places. Some people see opportunity in trying to buy breakouts when stocks break up to new highs. Some people see opportunity when stocks pull back and hold some sort of trend line. Some people see opportunity in retracements, trend line breaks, support breaks, resistance breaks. They're across the board. There's so many different opportunities to be taken advantage of out there. So it's all about spotting what you personally like for yourself, because we're all different. I may like one trading strategy. It's just because I feel comfortable with it. Somebody else may not feel comfortable with that trading strategy. So that's why it's extremely important for yourself to put in all of this screen time, get in all of this technical analysis, and break down these charts. Because with your eyes, you are going to start to see opportunity in areas where other people don't see opportunity. So let's break down MRAM here and look at potential opportunity that is to be had on a simple stock chart like this. So MRAM, the past 3 days, it's been in play. When you zoom out on this, you clearly see the days previous here, all right here. There's no really volume going on at all until you have this big volume explosion right here causing price action, that imbalance with supply and demand. That's what makes prices move, is that imbalance with supply and demand. So more than likely, this company came out with a press release, which attracts volume, that demand. And when you have a supply of something, that's what causes the price action. And this is why, as well, you guys see a lot of traders, day traders, they try to specifically focus on low float stocks, stocks with a low float. The float is the supply of the company. So if you have a wave of volume hit that supply and there's a low amount of supply of it, prices are going to rip. Versus if you have a large supply of something, it's going to take a lot of volume for prices to get up and going for that specific stock. So that's why you'll see a lot of traders out here. They'll focus on low float stocks because it doesn't take much volume to get prices up and going. So we have that imbalance with the supply and demand. We have price action. And just by zooming out on this chart, you could see clearly, just by plotting on a line, that this was relatively in a trend to the upside. Sure, it did break down right here, but it quickly came right back, reclaimed trend, and it continued squeezing up higher. That's why we had this sudden price jump right here. It's because it broke the trend line here. Shorts pile in on it, short it as it's breaking the trend, and it came right back. And when shorts are wrong, they have to buy to cover. And then when you have shorts covering, you also have retail traders coming in, they're buying as well. I call it a double whammy. So we got a nice double whammy squeeze. That's why we've seen prices shoot up so fast here. And then once the squeeze is over with, there's no reason for price or the stock to go up any higher. Shorts got squeezed out. After that, majority of the time, you're going to see stocks come all the way back down to where it got squeezed from. So pay attention to that. Always ask yourself, what current phase is the stock in? There's 3 different phases that a stock could be in on a chart. It's either in an up phase, a down phase, or consolidation phase. By this trend line we've plotted on this chart, MRAM has been in an up phase. So we have that upwards momentum, right? Then as soon as it breaks down through that downtrend, we're in downward momentum. So as soon as we break that trend, we're not looking for stocks to push up any higher. If at all, we're looking for a potential bounce opportunity. So it broke the trend here. And how many times have we seen stocks, when they break a trend, they'll fall down and then eventually they'll come all the way back up and then they'll retest the area where it broke from. So if you have a trend line here on a stock like MRAM, trend was up here at around $12, $12.50 when it broke to the downside of this trend. And when it starts to fall down, it falls all the way down here to 1075. So let's zoom in on that a little bit. We'll zoom in on this. Now, as we zoom in on this, and we know it just broke that trend line, and it's in a downward momentum. And as this stock pushes down lower, notice with every single push lower, the selling pressure that's attacking as the stock pushes down lower, right? It's just the reverse opposite, as if you're looking for stocks when they're pushing up and making new highs. You look for volume confirmation when that stock is pushing up to new highs. It's confirming that breakout to a new high with increased high volume. So the stock, every single time it pushes down lower, it has increased insane volume. Then, as it comes down and pushes here, notice how there's really no volume at all going on, and how tightly this stock as well is pulling back here. Just by simply plotting on a trend line, connecting all of the lower highs, you see how tightly this is pulling back here as it's retracing, right? Here from $12 a share, this got beat down all the way down to just under $11. So that's a $1 pullback there from the trend it broke from. It's pulled back nonstop $1. You see how tightly it's pulling back, right? I may be talking a little bit fast for you guys and blowing through all of this stuff, but just keep in mind, I've been doing this a lot longer than you. So I can easily spot this stuff because I've been doing this for 6 years. Versus someone new, this is totally new for you. So this is where practice comes into play here. Breaking down these charts every day, doing your technical analysis. By doing this every day, you're going to get better, faster. You're going to put this stuff together quickly. Because I know when you're new, you're kind of slow. It takes you about a half hour, maybe an hour to draw up all of your lines, do all of your technical analysis. Trust me, the more you do this, guys, the quicker you're going to get, and you're going to be able to identify technical analysis and opportunities and levels with your naked eye. You're not going to need lines and trend lines and all of that. So just keep practicing. Remember what we've said in the first masterclass. Trust in the process. Trust in the process. All good things come with time. So everything I'm putting together here makes sense, right? It's getting a nice tight pullback. Now it's finally breaking up over that trend line we've had here. Now it's holding as support. Now it's popping up and it's gearing up to that VWAP right here. Finding resistance right at VWAP at that 1130s. Pulling back, holding 1120s. So in this situation right here, you have your low and down here just below $11. Stock is up here at 1120s. Now you have some sort of an idea of where you can base your risk off of, which is just below 11 and down at the lows of these candles. And now we got to figure out, where is our potential reward target? Our reward target is going to be from the area it broke down from that trend line. $12, $12.50. You can see here the stock ran all the way up here to 12 bucks. If you were to enter in on this at 11.20s, your stop down just below $11. Your price target is up at $12. That's a 3-to-1 risk versus reward. You're risking 20 cents to make 75 cents or more. That's going about it the smart way. We know it broke its trend line. We scroll back out on this. We know it broke its trend line here as it was trending up like that. And we've seen stocks time and time again. The area it breaks from, chances are it's going to come right back up and retest the area that it broke away from. And that area that it broke away from was that $12 area. So after seeing this time and time and time again, now you start building up that confidence. You've burnt this stuff into your head and you've seen this stuff over and over and over and over. That's where you start building trust within yourself to pull the trigger on these types of trades because you've seen it time and time again. And all this is just a bounce opportunity back up to the trend line where it broke through from, versus somebody else who would potentially say, I would like to see this move up to $12, get over $12, and then hold $12 as support. Then maybe I'll think about taking a long position. There's people, we all see opportunity in different areas. I would much rather look at this and say, hey, why would I wait for it to make its move and already push to 12? Isn't there any type of opportunity for it to bottom out and then get that push up to 12? Because even if it touches and tests $12, I can unload and sell to all the people who are thinking of that plan of buying at $12 if it breaks over that and holds. So remember, there's all types of different people out here looking for opportunity in many different areas. There's also all types of different traders, swing traders, long traders, short traders, long-term investors. They're all looking at these stocks in different areas, different time frames. There's opportunity everywhere. Everywhere there is. So a good move here on MRAM. I hope this breakdown made sense for you guys, putting it all together on this. And I also quickly want to take a look at, this was the hot stock yesterday, randomly popping up from 5 and running all the way up to $7.80. And as it pulled back down here and went sideways, right at 650. For you guys that have been here for 5 months, 8 months, 1 year, how many times have we seen setups like this? We've seen setups like this countless times. Stocks run up, they'll pull back, then they'll just go sideways for some time. And from that sideways consolidation, a lot of times we get another up move like this that we've had here this morning. So from 650, this had a nice $1 push right back up to its highs where it stalled out yesterday. Effortless, easy play. We've seen this stuff time and time and time again. And now that it's breaking up this morning, stock has chosen a direction that it wants to go for the day. So right out of the open, it pushes to the upside. You got a nice trend going on. I'll actually pull that back by connecting all of your higher lows on it. And you see, just by connecting all of these higher lows on it, you could see we're in an obvious trend. And then when it breaks down from that trend, it comes down to the VWAP, right? This is the same example we were just looking at with MRAM. When a stock breaks a trend and when it starts to fall off, when it starts to bottom out which it did here at around that $7.10. Look at this up move right here, right back up to the area where it broke down from that trend. So keep an eye out for that. When stocks break from an area, watch for it to bottom out, and if it starts to curl back up, stocks majority of the time are going to go right back to the area where they broke from. I see a lot of people, when they draw support and resistance lines, they draw them at where a stock made a high and where a stock made a low. Look at the area where stocks break from, to the upside or from the downside or even from consolidation areas. So let's look at another example. Let's look at RXT. That had a good example on it. So RXT here, can you identify the area where it broke away from? It broke away from the area about right here is where it broke away from this consolidation phase, from this little wedge that it formed right here. It broke down and away from that. And look at right where the stock pops up to. Pretty much right from the area it broke down from. As it's still, even as it broke from right here, and it got that death candle, notice how the stock perked right back up to the area that it broke from. And it's still currently been struggling right at that area it broke from right there. So pay attention to where stocks break from. That's the key. Not paying attention really to where stocks top out and bottom out. Remember, it's all in the way you look at these charts, and it all comes with time. Seeing this stuff over and over and over, you'll really start to pick up on trends and what patterns you recognize. Our brains are natural pattern seekers. Remember that. No matter what, even if we tell ourselves that we're not going to look for patterns, our brain naturally is wired to look for patterns in life. It's just a natural thing. That's why triangles, wedges, U-shapes are very, very popular in the stock market and with charts, because everybody sees these patterns. Everybody. Go back here to TRT, zoom in on this right here, this performance day here. How many times have we seen stocks set up patterns like this? Notice the area it broke from the downside, and then it came right back up, and then it was holding it as resistance. It tried to break up right there and then got denied. It got stuffed right there. And then back down she goes. Notice the wick that pops up right there. Gets denied right at the area where it broke down from, right? Then it trends all the way down. Then we go into an uptrend just by connecting all of the higher lows. Comes right back up to that area where it broke down from that wedge, right? Gets up above it. Now it's holding it as support. Look at that. And from that, you got a nice up move to the upside. Comes back down, holding support right here now, where it was all topping out right there. See how these stocks are moving? It makes sense, doesn't it? Break down these charts every day, guys. Put in the work. You yourself have to put in this work on your own time. I've done this for 6 years. You guys know how much time I have under my belt. I can easily break this stuff down. Simple, no problem. You just gotta put your head down, put the work in, and put in all of that time, and it will pay off down the road. Because majority of people that come into this, they just think I'm gonna tell them a secret and they'll be good and they'll make money. It doesn't work like that. It just comes from putting in that time, learning lessons about yourself, your strengths, your weaknesses, what you yourself are seeing day in and day out, what patterns are you recognizing, and focusing on that. Paying attention, again, to also what are your weaknesses. Just by noticing what your weaknesses are, you then know what to stay away from, and you know what to be on the lookout for. As I always say, guys, respect this game, because all it takes is for one trade to take you out. Just as easily as that money comes in, and it's a great feeling when that money comes in, sometimes it feels effortless how easy this money we make out here. But remember, you can blow up that money just as fast. Everybody can trade. Remember that. All it takes is a click of a button. Anybody can trade. All you gotta do is click the button on your mouse or the buy button on your phone. Anybody can trade. But it's a rare breed that can come in every single day and consistently show up every single day, day in, day out. See a lot of people come and go in this game and continue on. Consistently profitable. So every day, having that mindset, I want to show up tomorrow. I want to live to trade another day. Take it one trade at a time. Do not overwhelm yourself. So that's going to wrap it up for this quick technical analysis video. I'm Mr. Wolf. As I always say, have that patience, have that discipline, study, study, study.